Hey everyone, it's Ali Corbin, Justin Nielsen here with a look at the action in Thursday, November 2nd, where we saw a follow up to the follow through. Another day of strength, Justin, and November starting off strong.
Yeah, so now it's just a matter of can we keep it going? Because we certainly saw some follow through days previously that quickly sputtered out. But we've got some things to look at this time around that are pretty good, and we've got some stocks also. So we'll talk about Uber today, Pulte Group, and also Ferrari.
Let's do it. But first, let's take a look at those major indexes and analyze those. The NASDAQ today up 1.8%. Even stronger was the S&P 500 up 1.9% today. Small caps with a pretty huge day, Justin, up 2.6%. The Russell 2000 there. The Dow also posting a solid gain today, up 1.7% on the day. So this seems like it was a broad-based rally today, which is exactly what we've been wanting to see. Like you said, can it continue? That's one question. But as of today, we're seeing that participation broaden out.
Yeah, definitely. I mean, this was a day where all of the sector spider ETFs, there's 11 of those, and all of them were up. So that was nice. On the advanced declines, just looking at Thinkorswim, I'm showing for the NYSE, it was about 2,700 versus just under 400. I mean, that's over a 6-to-1 ratio. That's exactly kind of what we were seeing on the decliners versus advancers for a while. So it's nice to see that flipped. On the NASDAQ, it looked like the advancers came in at about 3,300 and about 1,000 for the decliners. So at least a 3-to-1 ratio there. Great action. So what we really need to see is, hey, can this continue? Now, a few things that I like about what I'm seeing on the NASDAQ are
Mm-hmm.
just the fact that we have that 3 waves down. So
Yep.
that's a plus, something that we've seen before, a lot of bottoms where you get a few false starts. Bill O'Neill, the founder of Investors Business Daily, he used to liken it to an old saying from John Wooden, the UCLA basketball coach, the Wizard of Westwood, who would say, you fake one way, and then just as soon as they get used to it, you go the other
Mm-hmm.
way. And that's kind of what we're seeing with this 3 waves down potentially. I also like that we undercut the 200-day moving average line. We undercut that 13,000 level. Kind of, we're
Mm-hmm.
able to shake out a lot of folks, and maybe this is the one that works. Now, that doesn't mean it's all smooth sailing from here. We still have that 50-day moving average line that we need to cross, and we need to break this downtrend of these lower highs and lower lows that we've had. So if we can get above this kind of trend, to the downside that we've been seeing, that would be a nice thing to see. And
Mm-hmm.
ideally, we get above it, and then maybe we pull in a little bit, but the low is higher than this previous low, and
Mm-hmm.
that's where we can really start changing this trend.
Exactly. Yeah. Because that's the definition of an uptrend after all,
Right.
getting those higher lows.
If you
So,
just want to take the simple definitions, and again, S&P 500,
yeah.
it's too early to tell what the volume is going to come out as today. But remember, the Nasdaq was the only one really in position yesterday to have a follow through day. But it certainly qualifies on the price. We'll see about volume. The Russell 2000, the fact that the
Mm-hmm.
small caps were participating in a big way, up
Right.
2.5% there. That's pretty
That sticks
spectacular.
out.
It does. It does. And look, we have to give some credit where credit is due. If you pull up 0TNX, let's be honest. A lot of this is, thank
Yes.
you,
Thanks,
Treasury yields
tenure.
for coming down. That's changing a lot of folks' outlook. And this, it was pretty much expected that the Fed was not going to be raising rates yesterday. The fact is that the 10-year Treasury was doing a lot of the work for the Fed, making that a little unnecessary. But now people are starting to think of, okay, are we possibly done with the rate hikes? And even if we don't go down considerably, if we can just kind of get used to it at this
Stabilize.
level
Yeah.
and stabilize, I think that'll make a lot of people feel a lot better.
Absolutely. And while we're on this, we could take a look at some of the different groups that benefited from the yield here coming off. And home builders, that's definitely one clear
Mhm.
area. Justin, XHB, a day of outperformance up almost 2.2%.
Yeah, so you just had a lot of these stocks. Look, for a while there, it was actually pretty amazing how well the home builders were doing in the
Holding
face of
up,
these
yeah.
rising rates. But a lot of people are also have been projecting if rates come down a little bit. I mean, housing has gotten so unaffordable for so many people because usually you get this this balancing act. As rates go up, prices go down. There's a little softening, but inventory has been so low that you haven't
Mhm.
gotten that softening. And so it's just been making it tougher and tougher. But if the rates come down, there's probably a lot of people that are on the sidelines that are going to be looking to snap up,
Yep.
homes. Again, the question is whether or not the inventory will be there for them. But
Mhm.
XHB had a good day. When I mentioned the 11 sector spiders that I'm tracking every day, XLRE, which is the real estate sector spider fund, that was the one that was up the most. So definitely, definitely something worth looking at there. Now, again, is this sustainable? Is this something that can follow up? That remains to be seen. But seeing a lot of stocks, a lot of groups, a lot of areas breaking downtrends is a good thing, and potentially giving you some opportunities for
Yeah.
buying. But you don't want to go too crazy,
Mhm.
right?
Oh, for
You
sure.
always, yeah, you always want to have that risk management in place. And the thing about these breaks of downtrends is you've got some lines in the sand. Look, if we go back below these lows, I think that's a clear indication
Yeah.
that this reversal is not working. This downtrend break is not working, and so you're going to need to exit.
Mhm. No doubt. And Justin, it seems like the evidence that we've been wanting to see is okay, is there merchandise to buy? How are stocks looking underneath the surface? Because we can't just have seven stocks propping up the market. We'll take it. We'll take
Well, we
those stocks
can,
looking
and we
good,
did.
but we'd like some more. We'd like some more merchandise. And
Absolutely.
it seems like it's broadening out. A lot of bottom fishing perhaps today. I know that's something that you were pointing out earlier. That's not really what we're looking for. But if we see more participation, that is very helpful for us as stock pickers.
Yeah, there certainly was some bottom fishing. As I was looking at the Nasdaq 100, I sorted it by what was up the most, and at first I thought it was my short list because it had things like Starbucks on there, and things that
Yeah.
had just been beaten down so much. And there were a lot of times where we would see these gains happen in the indexes, but it was really fueled by just some of the worst looking stocks. I would say that the thing that sticks out to me as being a little different this time is that we had a lot of stocks that were also getting back above their 50-day moving average lines, and that's what we're going
Yeah.
to focus on today. But
Yes.
yes, no doubt, if you look at some of the biggest movers, a lot of them were below both their 50-day and 200-day lines, which is
Mm,
where a lot of stocks are sticking right now. That's just where they're at. But the
yeah.
fact that I saw a lot of stocks getting above their 50-day moving average lines after having either gotten support at their 200-day lines or just been hugging their 50-day lines, that was
Mhm.
something that gave me a little extra confidence today.
Yes, definitely. And really quickly before we move on, another measure of breadth, we like taking a
Yeah.
look at RSP and QQEW. So RSP outperforming SPY today, move that stands out on this chart as well, Justin.
Yeah, you can't forget about this one. It was pretty good to see that this was up so much. So again, what what ended up happening was a lot of the former heavyweights, the ones that were doing all of the lifting
Yeah, it
for
took a
the
little
stocks,
break.
they took a little break today, and guess what? They deserve it. They've been the ones kind of holding up everything. The fact is that a lot of the stocks were up today. A lot of things were looking good. Now you
Mhm.
had your losers too. Make no mistake. And look, earnings season is going to do that,
Yep.
but the large majority was favorable. And the fact that you got both of the equal weighted ETFs, QQEW and RSP, both up over 2%, I think
Mhm.
was a good positive as well.
Yep, we like to see it. Let's see if it can continue. Let's take a look at some notable action today, notable movers talking about stocks getting above their 50-day lines. Here's Uber doing that in a big way today. A couple of potential catalysts here, Justin. We definitely had DoorDash surging on its
Mm,
report, so maybe moving up in sympathy with that a little bit here. Also, a settlement for driver pay, so maybe
right.
sigh of relief getting that out of the way. We do have earnings coming up in 5 days, including the weekend. So, not a whole lot of
Mm,
time for
yeah.
traders to build up a cushion, but maybe for aggressive traders who want to take a stab at this and see if if the market tide is changing and we do get some of that momentum, to see if they can get a 5% position or so in a couple of days and then determine whether to hold into the report.
Yeah, absolutely. Or, you could just wait for the report and see what happens. Hope for a
Mhm.
consolidation, right around that $50 level. There's a lot that can happen, but this is definitely something that belongs back on the radar. Joe Fahmy was on the podcast yesterday. I mean, we got to call him Follow Through Day Fahmy because it seems like, follow throughs follow him wherever he goes. And this was one of the stocks that he mentioned. What I like about it is that this did have a, participation in that May, June, July rally.
Mhm.
And even though it did come down, this was a pretty orderly pullback that it had. The consolidation was, fairly tame at 19%. It came down, didn't even come down quite to the 200-day line, really got support of that 40-week moving average line. And here we are still a ways off from the high, 6% off of the 52-week high. And that relative strength line, it's already in highs. So those are some positives here. Not too much volume on the downside. Again, it was fairly orderly. Um,
Mhm.
and we'll probably see a lot of volume coming in this week.
Yep.
So yeah, I think it's a good setup for earnings next week, and those are
Okay.
going to be happening, I believe, Tuesday before the open, if I'm not mistaken.
So yeah, really not a lot of time. We've got
Right.
two days.
Yeah.
2 trading days. We'll have to see what happens with this one.
Mhm.
Um, and yeah, maybe earnings can be that breakout catalyst. We
Mhm.
shall see. Next on the list, let's take a look at one of those home builders building the right side of a base. A strong day in Wednesday's session, and adding to that today, PHM Pulte Group up 3.8%, strong volume. And we've seen strong volume coming back into the stock as it's carved out the right side of the base.
Yeah, that volume is just, that's kind of your signature that there are institutions that are piling into this. They really can't hide their actions because they're just so large. And certainly yesterday, I could see where you might have been a little hesitant. It's like, okay, one day you're just above the 50-day moving average line. Are we at the top of this, downtrend that has been happening? If you just kind of, connect those dots at 86.16 and 83.17, but I think today really kind of showed with gusto that yes, this is coming back. Here's another one. The depth pretty mild at 20%. This is not a huge amount. You just basically grazed that 200-day moving average line. You were really well contained. And remember, again, a lot of stocks were below their 200-day lines and 50-day lines in this most recent pullback. So the fact that you had this holding up, not being too far away from its 50-day moving average line. Yes, it had weeks below it, but now it looks like it could be turning a corner. And again, that volume is something that's pretty important to be
Mhm.
focused on right here. Another one where we're 6%, 7% off of our highs, the relative strength line, there it is at new highs already.
Mhm. Good one for the list there. Okay, so if traders didn't take action yesterday, Justin, or today, what do we want to see from here?
Well, I could easily see this come up all the way to that 86.16 high. And if it does that, in very quick order, which again, this wasn't too much of a correction, so you could see that happening pretty quickly. If it does that, ideally, I'd like to see a pause right there. A lot of times when you pause at those former levels of resistance and hold the gains, that can be kind of building a foundation for the next move up. So I think the fact that we had these back-to-back days that were so strong, we're probably going to see a little bit of a digestion of the gains. We're certainly seeing that in the likes of Microsoft and Meta. If we see that with some of these stocks that had these big gains, I think that's going to give a lot more opportunity. So the stocks that are high on my watch list are these high relative
Mhm.
strength line stocks.
Absolutely. And the reason why, Justin, is because in past market cycles, IBD's research shows that it's those RS line blue dot stocks, those breakouts that happen on or around, before, after, weeks, months after uh, the follow through days happen, that are the market leaders that are really
Yeah.
leading the market.
Time and time again, we used to have a workshop that we would do every year in Santa Monica. Bill O'Neill, Scott O'Neill, they would cover the winners of each year. And by and large, I mean, it was just, amazing how often you would see that the relative strength line was one of the most consistent indicators that a stock was going to make a big move. And remember, this was happening before the move actually occurred. You would see what did it look like before it had its move, and the
Mm-hmm.
relative strength line invariably was already strong. And then
Right.
these went on to 100% or more moves.
Mm-hmm. Yep, and it's been a pretty strong year for the stock of the last breakout. The RS line was leading as well. Okay, last on our list, another strong RS stock, and that is Ferrari revving up here. Volume looking strong. RS line blue dot. Let's take a closer look at the daily here. A big move today on earnings.
Yep. So this one had earnings behind it, and look, we've got a lot of the big ones out of the way, so that's kind of nice. It was something that was causing a little bit of trepidation. How is this earnings season going to go? Sometimes they have a tone to it, and certainly the tone today was a lot of positive. Again, you had your ugly ones. RELY, I'm looking at you. Um, a 30% drop.
Yeah.
But by and large, most of the stocks are having a good
Mhm.
reaction to their earnings. Even like something like AMD, where Ed made the point that it doesn't matter what their guidance is, they always seem to do well, no matter how much they might miss on earnings. But getting back to race, the thing on Ferrari that is really attractive here is that here's another one that did not give up much ground during this consolidation. It got held by its 200-day moving average line, didn't even come down to it. It really, stuck pretty close to that 50-day moving average line. The depth of this base was only 14%. That qualifies it as a flat base. And here we are now. We've solidly broken that downtrend. Look at the volume that's been increasing
Mhm.
here. Just right before earnings. Weeks and weeks of accumulation here.
Mhm.
So those are all positive things, and it just kind of culminated in the reaction to earnings today. Which, by the way, this has got an EPS rating of 93. You've got quarter after quarter of acceleration. A real turnaround from some negative growth a few quarters ago, and you've got that acceleration happening also on the revenue side. So going from a 0% to 10, 18, 19, now 33% in the most recent report. That's all going in the right direction.
That it is. Okay. We'll have to see if the strength can hold because that's the other thing too, right? Can these earnings gaps hold or are they going to
Mhm.
fade, right?
Yeah, and it's fine for there to be some digestion. I mean, if you go
Yeah.
up 8%, 10%, and you pull back 2%, that's still holding the
Mhm.
bulk of those gains, and that would be the ideal action. You might get some fill in of the gaps here, but what you don't want to see is for these stocks that have just retaken their 50-day moving average line to lose those 50-day moving average lines. That's going to be an indicator that things are potentially wrong. One more thing on race here that is kind of nice. This has already made a higher low. So this is one of the things that kind of had a leg up here. And a few of these stocks were in the same boat. So whereas the index was making new lows, some of
Mhm.
these were
Yep.
holding above their lows. And that is
Yes.
another sign of strength, something that if you go back to 2009, when we came out from the great financial crisis, that was one of the big things I learned from Bill in that one, because he was buying a lot of stocks that were well off their highs, but they did not undercut when the indexes did, and those were the winners. The
Yeah.
likes of Apple, Priceline, Baidu, CMG, the list goes on.
Yeah. Some signs of strength there to be keeping an eye out for, no doubt. Well, thank you so much for that, Justin. And thanks everyone for tuning in. That's it for today. We will be back with more tomorrow morning on IBD Live, and we hope you join us. Investors.com/IBD Live for all the details on that. We're going to be joined by Matt Caruso of Caruso Insights. Always enjoy hearing his perspective on stocks and the market. And we'll have to see what's on the top of his buy list as the market turns. Thanks for tuning in, everyone. Investors.com/IBD Live for all that. And we'll see you right back here tomorrow.